Hey friends, welcome to Foundations of Stocks and Options Level 1, Class 1. I'm glad you guys are here. Today we've got some interesting content to work through, certainly some unprecedented market conditions. We're going to talk about all of that. I'm really excited to do this fresh recording of Foundations. If I think back to the first time this course was written, it was 2008 coming into 2009, and actually it kind of got developed by accident. Many of you guys have heard this story before. I'll share it here briefly on the front end, but I had come out of a failed business. I was working in a restaurant around the clock. I was doing all kinds of side hustles, trying to make any amount of money I could. I owed my dad like 50 grand. I owed some other angel investors in that failed business another 50 grand plus, and I had thousands and thousands of dollars in credit card debt. And it was really kind of at the end of my rope financially. My marriage was on the rocks. It was not the best version of myself back then. And I had learned to trade almost a decade earlier, and I had thought, if I could just get enough money to start trading the market again, I think I could pull through. And I was too dumb to realize, bro, I mean, you're in this unstable situation. Let's go and invest or trade our cash in an equally unstable environment called the stock market. And not just the stock market, but the stock market in 2007 going into 2008. And so I did that, and as the market started going down, again, I was too dumb to, not know what I didn't know, and I started using my bearish trading strategies, and the market's selling off, and I'm making money, and I'm paying my dad back. And finally he comes to me and he says, son, what are you doing? I think he thought maybe I was selling drugs or something. I don't know. I said, Dad, I'm trading the stock market. It's so cool. Let me show you what I'm doing here. And I started explaining the idea of put options to him and how you analyze, and the market's going down. Of course, any monkey could have seen the market was going down in 2007, 2008, but then the market really went down. You remember the crash in 2008, and I was making money hand over fist. I made enough money to pay my dad back, to pay my credit cards off, to pay the angel investors back. And it was about that time that my brother-in-law got interested in what I was doing, trading the stock market. And I started to teach him, and then he had some friends, and we started to teach them, and then some other friends. The next thing you know, sitting here about January, February of 2009, there was about 700 people that wanted to join this crazy webinar where we were just talking about how to trade the stock market. And so the content got codified and put into this course, and we called it Foundations of Stocks and Options. Period. That was it. Foundations of Stocks and Options. And that led into, it was about a month-long experience and webinars that we were doing, and that led into, Foundations of Stocks and Options Level 2, which was largely about options strategies back then, and then Foundations of Stocks and Options Level 3, which were advanced option strategies and risk management. Fast forward a decade, almost 11 years at this point from that beginning, and the content has changed very little. It's interesting because this was written again, coming out of that market crash. In fact, we didn't know when this was written, we didn't know that it was the beginning of the greatest bull market in history. So we were just writing it, as if we were coming out of, the crash of 2007, 2008. We believe that the bottom was forming, and you get, Foundations of Stocks and Options. So the reteaching of this, or the re-recording of it, is very appropriate, seeing how we've just come through this market crash of 2020. I don't know if we're yet at the bottom. We might be, we might not be. I'm sure we'll be talking about that as we go through all of this content. But the feeling current events is very, very similar to what we experienced back in 2008. Since then, just, by way of highlight, I suppose, this course has gone around the globe. Hundreds and hundreds of thousands of traders have worked through Foundations of Stocks and Options. And what's interesting is over 11 years, the content has changed very, very little. I'd say no more than 10 or 15%. And that was really a testimony to just getting it right the first time, which I would say was based on genius, but the truth is it was probably just based on God's favor and getting the right content down in the right sequence. So that is the big thing that's changed. We've changed some of the sequence of the way the content comes out, made it a little bit easier to understand and work through. So that's the backdrop on Foundations of Stocks and Options, and I'm ready to to start if you guys are. We're recording this in a live webinar, so you will hear me interact with them throughout the experience here. If you're watching this as a recording, we're certainly glad that you are here. If you're watching this live in real time in the webinar, I'm certainly glad you guys are here as well. I will hold all of the live questions and answers until the end, and so that way, if you're watching this on a recording, if you don't want to wait through all that that content at the end, you don't have to. I'll also tell you, if you feel like you're missing out of the live recording, the advantage that you have is you can put me on 2x speed or 1.5 speed if you want. So I'll let you know that on the top end here. You can speed the video up and get through about an hour of content in 30 minutes. So that's an advantage you have that the live friends who are here with me now don't necessarily have. So without further ado, I should tell you on the front end that this webinar is for educational purposes only. All example and analysis are intended for this purpose and shouldn't be considered as specific investment or trading advice. All hypothetical examples are for the purpose of teaching principles and are not intended to suggest future results. The risk of loss in trading securities, options, futures, and foreign currency can be substantial. Customers must consider all relevant risk factors, including their own personal financial situation, before trading. Options, futures, and Forex are considered more sophisticated investment vehicles due to high leverage and are not suitable for all investors. And then this last one is a biggie because we will dive in throughout the training here. I will share with you some of my personal trading results. Heck, I'll share with you all my personal trading results. And I do not want that to be construed as being considered typical. Like I said, I've got almost 2 decades, actually over 2 decades of experience, a lot of lessons learned the hard way. And, hopefully you guys can short circuit that path or circumvent that path of hard knocks. But the truth is, you probably will make some mistakes and lose some money. Heck, I still make mistakes and lose money. So are we all duly informed? I like how Alfonso says it. He summarizes this whole slide and says, can we just all act like adults? I think that's great advice in life. Can we just all act as adults? All right, so welcome, guys. You heard a little bit of the story in the beginning here that, we've got some amazing opportunity that's in the stock market. The stock market is near and dear to my heart because in many ways it saved that marriage. It improved my relationship with my kids because it created some freedom and flexibility. And what I realized was the stock market was a place where I could go and put some cash in my jeans. And so what I hope that you realize over these next 8 sessions that we've got together, and then those of you who continue on to Foundations Level 2 and Level 3, ultimately 24 sessions, what I hope you can learn in the process is how to put some cash in your jeans without going broke in the process. Now, I don't want to major on this here, and you can tell from my picture, my silly little picture here with my oldest daughter. Not our oldest child, but my oldest daughter. I don't tend to take myself too seriously. I think there's probably too much of that in the world. I'm a fun-loving, easygoing redneck. Enjoy living out in the country. We've got quite a bit of property. We've got lots of family that we help take care of and support and live together, and that's just me. In fact, if I turn my webcam on right now, I'm sitting here in a hoodie and a hat and got a quarantine beard that is pretty epic. So anyway, a lot of people do call me the cash in your jeans guy. I guess that's kind of a fun colloquialism, I suppose. But somewhere along the line, I was taught that phrase, and it's really how I look at a lot of things in life, whether it's selling firewood with one of my kiddos as a side hustle, or doing real estate, or doing the stock market. I look at all these opportunities and say, how do I use that to put some cash in my jeans? And hopefully you guys take some of those tips away as well. Over the last decade, like I said, I've trained over 300,000 traders at TradeSmart University itself, not to mention some personal friends and family that I've worked with. I've got people who've got accounts that are at 1.5K, and people that have got $1.5 million accounts. And I put that in there just so that you feel encouraged. If you're on either end of that spectrum, if you're sitting there with the $1,500, great, this is for you. If you're sitting there with 1.5 million, great, this is for you. One of my closest friends sold a business recently for over 60 million. That was a good day for him. And he decided that in his retirement, he was going to start trading the stock market. And so we started talking stock market-y things, and in a strange turn of events, he'd always been my mentor on things. I was able to actually coach and mentor him, and he was one of those individuals with a larger trading account. And where did I bring him? right back to foundations of stocks and options. This is where we started. So you're in good company on either side of that equation. I'm also on the cutting edge of artificial intelligence for retail traders. Depending on when you're watching this recording, you may or may not have access to this. Right now, it's exclusive to just a few of our TSU members, but we're expecting towards the end of this year, 2020, it'll be rolled out for more commercial sale as well. This is legit, true, deep learning with neural networks, and we analyze millions of data points on any individual security, and we're able to do predictive analysis on that. This is technology that the big boys have been using for a decade now, the ones that spend $1 million a year on their research, and we're bringing this to the forefront of retail traders, which is who you and I are. If you don't know if you're a retail trader or a professional trader, then you're a retail trader, because trust me, you would know if you were a professional trader. And then for whatever it's worth, as of this recording, my personal account is up over 50% year to date. I believe wholeheartedly in rigorous authenticity from TradeSmart University. So at any given time, you can ask us how our trading accounts are doing, and we'll be glad to share that information with you. We share very regularly in live webinar formats. I'll open up the account, try to target about once a quarter, and we'll walk through all the trades. That may seem altruistic, so you guys can see what I'm doing. The truth is it's 100% selfish, because there's no better way to stick to your trading plan than to share it with about a few thousand people that are going to look over your shoulder and judge every single freaking thing that you do. And because I don't like being made fun of or judged, I try to stick to my actual stated trading plan. So you want to get a little leverage on yourself, share your personal trading results with thousands of people, and they'll make sure that you stick to your strategy. I also want to address the question on the front end that I'm sure everybody is thinking in here, and I'll just go ahead and ask it so you don't have to feel bad asking it. And it's this: okay, smarty pants, if you're really so good at trading, why don't you just do that? I think it's a fair question. I think it's one that deserves an answer. And the answer to this question actually goes back to my ethos and the culture that is all throughout TradeSmart University, and it's this. I believe with all my heart, that when good people have more money, they're able to do even more good things in this world. Friends, money is an augmenter. If you're a jerk, you're going to be a bigger jerk when you have more money available to you. If you're generous, you're going to be even more generous when you have money available to you. I don't mean this in a self-endorsing kind of way at all, but my wife and I enjoy a lot of privileges to be able to give and do things like rescue girls out of human sex traffic rings over in Nepal, or to help fly victims, burn victims, or cancer victims around the country on angel flights so they can get to the clinics where they need to be to get the very best kind of care possible. I love that heart about my wife. If I gave her the choice between having $100,000 in cash or going out and building wells and buying goats in Africa, she'd build wells and buy goats every single time, 10 out of 10 times. She would always rather be gracious and giving. I'm probably like, can we just keep like 50,000 of that? But I love that about her. And when she has more money and more resources, she's able to do even more good things in this world. So my question isn't necessarily, if I'm so good at this, why don't I just shut up and do my trading? My question back to you is, why wouldn't I share? I'm happy to be transparent with any of my trading results whenever you guys want to see, but my hope is this. As we work together and as we master these principles, that you guys will be able to go out and use this skill set that you've developed to do more good in this world. I've learned a lot of things the hard way, and I've learned a lot of things, or I've done a lot of things the wrong way, and I've learned a lot of things the hard way. And after about 10 years of doing this, I'd be a fool not to recognize that there's a few patterns and opportunities that are out there in the market. First of all, the stock market can be a place to stash your cash or to generate additional cash flow. Y'all, this was a paradigm shift for me. Happened about, 15 years ago or so. When I realized there's two stock markets, one stock market where you actually invest your cash and another stock market where you trade your cash. Now, I don't mean that there's two different exchanges or any of that. It's the same stock market. but it's two totally different approaches to them. I believe wholeheartedly in both of them, by the way, but if you confuse a trading strategy for an investment strategy, you're going to lose a lot of money. And if you confuse an investment strategy to be a trading strategy, you're going to lose a lot of money. Once you realize there's two different markets and give yourself permission to trade the market that you want, then it's a game changer. I also believe that right now you've got an edge over the big institutions. You have advantages that they don't have. We're going to talk about that in just a second here. I also believe that consistent, successful trading is pretty darn simple and easy and boring. The problem is, as one of my dear friends, Alfonso, likes to say, what's easy to do is also easy not to do. If you're looking for a place to get your blood pressure up and get your endorphins running, I would encourage you that the stock market might not be the best vehicle for that. Go learn to fly or race go-karts. But if you're looking to grind out 3 yards in a cloud of dust, 3 yards in a cloud of dust, 3 yards in a cloud of dust, if you're willing to do the same thing every single time, not deviating from the plan, then the stock market is a tremendous opportunity. The reason most people lose money in the stock market, though, isn't because of the stock market. The professional, quote-unquote, investors have proven to us that there's certainly opportunity to make money in the stock market. Otherwise, guess what? We wouldn't have a flipping stock market if there wasn't any opportunity. The problem with retail traders is they sabotage their own opportunity. So do you guys want the quick, easy, simple way to put cash in your jeans without spending years to figure it out? I've got the answer for you on this next slide. Right? And while we're thinking about that, I just want you guys to imagine, right, to give you a little momentum to carry through these next 8 sessions together, because we need something to pull us along every now and then. But just imagine when you get to the end of this, there could be an opportunity. We've got people right now in our masterminds. There's a Forex mastermind where they sit down every single day, and they've got 4 time periods that they trade throughout the day. And they say, what kind of cash can I extract from the stock market right now? That one's led by Valerie Fox, one of our TSU instructors, and it's the Forex mastermind. There's another mastermind by Alfonso, my buddy I just mentioned a moment ago. They're a little different approach. They're my lifestyle traders. And they say, we're going to just trade the market 4 times a year, and then we're going to party the whole rest of the time. So 4 times a year, right around earnings seasons, they deploy this strategy where they extract their cash from the stock market, and that holds them over for the whole year. They do a year's worth of trading in just 26 weeks or so, probably less than that. All right. ATM traders, lifestyle traders, what kind of trader are you? It doesn't really matter. It all comes down to these 3 things. Write this down. It may be the most important thing that I share with you in this lesson today. Number 1, you've got to learn to pick winning stocks. That's analysis. The second most important thing, no, it's equally important. The second equally important thing that you need to learn to do is to use the best money-making strategy for the situation. Do y'all think that maybe the strategy has changed a little bit today than where it was in December of 2019? You better bet. Traders, retail traders like you and me who are holding trades overnight are just going for a roller coaster. People who didn't even realize they were day traders or interested in day trading are accidentally stumbling into day trading because they don't want to hold their trades overnight. There's just too much volatility in the current market. And that's going to settle back down. And hopefully by the time you're watching this recording, sometime in the future, we're back into normal operating procedures with the stock market. But your strategy has to flex to match the current conditions that the market's in. And you don't need dozens of them. You need like 2 of them. I need my regular strategy, and then I need my volatile strategy. The third most important thing that you need to do to be successful trading the stock market, and I would actually say this is the most important thing that you need to do, is manage your risk. Write this down. It might be the most important thing that I tell you in this entire video. If you manage the risk, the profit will often take care of itself. You could even scratch out that word often, but just to stay compliant with my FTC friends, we probably should put it in there. If you manage the risk, the profit will often take care of itself. It's easy to make money in the stock market, y'all. It's really hard to keep that which you make. Over these next 8 lessons that we've got together, and like I said, those of you continuing on to level 2 and level 3, so that's 24 classes all total, every single thing that I teach you should fall into one of these 3 buckets: analysis, strategy, or risk. That's it. So if you find yourself getting confused or lost at any given time, say, wait a minute, self, is he talking about analysis right now? Is he talking about strategy, or is he talking about risk? That'll at least help re-ground you. It'll give you your true north that you can find, and then from there, we can start to dig a little deeper and further clarify. You might want to color code these. If you've got a highlighter, you could highlight analysis in blue, strategy in green, and risk management in orange. That's kind of our TSU colors that we try to highlight these different topics on. But that's it. If you can do those 3 things effectively and consistently over time, find winning stocks, use the best money-making strategies, and manage your risk, then you're going to have great, great success as a trader. Here's an overview of where we're going in this particular class. We're going to start with said overview, and then we're going to talk about some of the current trading environment that we find ourselves in. We've already covered much of that already. Did you all know that we've had one of the biggest market sell-offs in history? And then actually, as of this recording, last week, which was Easter weekend 2020, we had one of the biggest recoveries. The small cap stocks measured by the Russell's 2000, ticker symbol RUT. They've had their largest 1-week gain in the history of that index. I've been saying that, those of you who participate in some of our morning market updates we've been doing, I've been saying that word more and more, and not flippantly, like people say, the word literally when they don't really mean literally. But I've been saying that this is an unprecedented market condition, and that's the truth. It is unprecedented. We've never seen it. It's been the season of firsts. So where there's tremendous uncertainty, there's amazing opportunity as well. We're going to talk a little bit about the difference between trading and investing, because if you confuse one for the other, you are in deep kimchi. We're going to give you the tools that you need for trading, give you an introduction to charting, and some action steps that you need to take. If you guys remind me at the end of class, especially those of you who are here live with me, I'll be glad to do a complete market update for you all. You can also catch these at any given time. Those of you who have all access, it's always in our membership area as well. So you can go to my.tradesmartu.com and get access to the market updates. So let's do a quick overview of foundations of stocks and options here. I want to first clarify what FOSO is. And for those of you that are new, FOSO is the colloquialism or the abbreviation that we give to foundations of stocks and options, so we don't have to keep saying foundations of stocks and options over and over again. So what's FOSO? Well, in these first 8 classes of our Premier Trading course, Foundations of Stocks and Options, there's 3 levels. Like I said, I totally misread that sentence. This is the first 8 classes. That's what I meant to say. This is the first 8 classes of Foundations of Stocks and Options. And it's the premier trading course because literally it was the premier course. It was the first course that TradeSmart University ever put together. There's 3 levels to this in total, and it is designed to be a complete A to Z program. I should probably change that and say it's designed to be a B to Z program, because the truth is, if you have no idea what the stock market even is, this may start out a little bit advanced. And if you find yourself in that situation, please reach out to us, info@tradesmartu.com. We have a whole little baby course called Stock Market Made Simple that we're in the process of finishing an update as well on. And hopefully that'll be available in the next few weeks. So if you're watching the recording, it should be available now. And that will kind of onboard you. Like the questions that answers are like, what is a stock? So if that's kind of the level that we're starting at, then Stock Market Made Simple is for you. But if you have an idea of the stock market and its shares and how that works, even at a high level, then you're going to be fine right here in Foundations of Stocks and Options. This is a great first step for beginner traders. And then I will say it's a complete step all the way through to real money traders. And I forgot to button up that first bullet point on top there, but this is everything you need. Now, we've got 71 courses at TradeSmart because there's all kinds of cool strategies and analysis and all kinds of things that you can do to improve your trading results. But to get from beginning to profitable trading, Foundations of Stocks and Options is your one-stop shop. This is everything that you guys need to be successful. If you're an experienced trader, I encourage you to stick through as much as you're finding value from this, but it will help remind you of very important foundational training. And there's a couple types of experienced traders out there. Some of you are ones that have gone through TradeSmart and you've had great education and you just need a reminder. Some of you have either been DIY specialists and you've tried to get a bunch of freebie stuff on YouTube, or maybe you bought some cheap training from somebody else or whatever. And if that's the case, we may have some rewiring that we need to do to help you get on that path to success as well. So you may want to consider, even if some of this is review, some of it may also be new, and it'll make sure that we've plugged all the holes where others before may have left some gaps in your education. So this is for you. If you're a brand new trader, welcome to the jungle. I feel like we should have, is it Guns N' Roses that did Welcome to the Jungle? If you've got some training but you've not placed a trade yet, this is exactly for you. Or if you've traded a little bit but you're not consistently profitable yet, this is for you. This first level of foundations of stocks and options may not be for you if you're already a trading rock star already. And I'm happy to have you stay, but just be gracious to those who are starting as well. Or if you're decided that you're set in your ways and you're not open to new training, I don't want to hear all the reasons why I'm wrong or why we shouldn't do it this way. I beat you. We've got 10 years and 300,000 students that have gone through this, many of them successfully, not all of them because some people drop out or don't follow through or whatever. But I'm not going to rewrite the curriculum based on your bias. So just save the emails and save the chats if you're here live. But if you're open to new thinking, then this is the place for you. Or if you're not kind-hearted, this is not for you. And I'm serious. No jerks in here. So I believe, like I said in the beginning, when good people have more cash, they're able to do more good things. Well, if you don't fall into my good people category that I'm arbitrarily defining by my by my principles. If you don't fit in that category, then candidly, I don't want to teach you to trade, because if you're a jerk right now, you'll be a bigger jerk when we get a bunch of cash in your account. So if we've been known, if people become belligerent, to just go ahead and refund their tuition and say, why don't you move on to somebody else who can deal with your crappy attitude. So I'm sure that's nobody that's in here live or nobody that's watching the recording right now. Here's a few connections and resources for you to be aware of. If you are in here live, you have access to our Slack group. You also have access to our private foundations group. And I said if you're in here live, this is for anybody. So our intention, as of whatever we're in, April 2020, our intention is every month we'll start a new crop of people going through foundations of stocks and options. It will not always be taught live like we are right now. Most of them will do the on-demand recordings, which a lot of people like anyway, so they can watch the recording on their own time or they can watch it on 2x speed. But if you're coming through foundations of stocks and options, you will have access to that live Slack group, and we're going to be sending you some information this afternoon or tomorrow on how to get into that Slack group and participate in that conversation. You have access to that for 2 months, or you have lifetime access to the private foundations of stocks and options group on Facebook. Now, those of you who are seasoned FOSO graduates and you're just coming through as a repeat, I strongly encourage you to both help those who are starting off in the foundations group and also to be an encouragement to them. Learning to trade is like moving through a pipe. And in the beginning, you go into the pipe and it's all wide-eyed and bushy-tailed and everything is amazing and it's blue skies and sunny and probably little bunnies are jumping all around. And then boom, you enter the pipe. And all you can see is the person ahead of you and the person behind you. But if you go far enough down the pipe, there's people who are exiting the pipe on the other end. They've learned to trade. They're consistently profitable. And what needs to happen is that message needs to go from person to person to person, all the way back through the pipe and say, bro, sis, let me just tell you what it's like when you exit the pipe. It's awesome. And I know where you're at in the pipe. And I struggled with that same thing right there in the pipe. But keep going. It's worth it. Push through. Persevere. Here's this little thing. Here's a way that I kind of saw this, differently maybe than Josh taught it. And here's how it helped me get through. And if you share that kind of information on Facebook, number one, you feel really awesome about yourself because you're helping somebody else be able to do more good in this world. But number two, you're only reinforcing that which you have learned. So please, if you've exited the pipe or you're in the pipe and you're just a little further on down and you've figured out a thing or two, share in that Facebook group and be a blessing and a contributor as much as you are a consumer. And if you're new and you've got questions and all that, yeah, by all means, ask them. That's what the purpose of that group is. That's a lifetime access. The only way you get kicked out is if you violate the jerk clause. So don't do that. We don't need any jerks around. The recordings and other resources are going to be at my.tradesmartu.com. You should have received login info for this. If not, our amazing Rebecca will help get you set up for that. You can send her an email. She has a very complicated email. It's called info@tradesmartu.com. info@tradesmartu.com. Or you can always chat her. She's the human on the other end of that little chat bubble that's on all of our web pages. We're also going to be having the weekly application sessions. This is spectacular, especially if you're coming through on a recording, a self-paced experience. Coach Anna is going to be doing weekly sessions. You get access for a month. If you're here live, you actually get 6 weeks because we're not bombarding you with application sessions while we're binge going through the foundations program. But typically, going forward, you'll have access to this for a month, so you'll learn the content on the recordings on your own, and then Anna will host this application session so you can come and ask and say, hey, I didn't quite understand this candlestick thing or this chart pattern thing. Can you show me an example of that? And she'll be glad to pull up some charts or whatever is appropriate to help answer that question. And then the last thing I'll say, and this isn't a throwaway bullet, this is a real bullet. I would encourage you to find a buddy. Connect with somebody on Slack or connect with somebody on the Foundations group. One of the biggest blessings in my life has been trading with other people. I've got the benefit of trading with the TSU staff. Everybody that's on staff, let me make sure that's true. With just a couple small exceptions, everybody who's on staff at TradeSmart is a trader. And so we're always talking about what we're doing and trades we're placing and things that we're looking at. And so I'm naturally in that environment all day, every day. If you're not in that environment, it can be a little bit lonely out there. So find a buddy. We've got Zoom and we've got Google, whatever it's called, I don't know. And you guys can connect every day and find somebody that you can talk stock markety things with, and more importantly, hold each other accountable, both to your education right now, but also hold yourself accountable to doing what you say you're going to do. I'll give you guys 4 questions to walk through when you're doing your sessions with each other. This may be the most important thing I tell you all day, so write this down. Question number 1 is, hey, friend, did you do what you said you were going to do? Question number 2 is, how'd that go? Excuse me, yeah, how'd it go? Question number 3 is, what are you going to do next time we talk? I got my questions out of order. So I've messed up my own questions. This is terribly embarrassing. This is what happens when it's not in the notes or on the slides. Question number 1 is, what'd you say you were going to do? Question number 2 is, did you do it? Question number 3 is, how'd that go? Question number 4 is, what changes do we need to make? And what are you going to do before the next time we talk? That's it. That's the 4 questions. Right? I guess you could put the first bullet at the beginning or the end. What'd you say you were going to do? Or what'd you commit to doing? Did you do it? How'd that go? And what do you need to improve next time? And maybe the answer to that's nothing. I don't need to change anything for next time. All right? That one was a freebie. And the question that everybody here live is asking, is this recorded? The answer is yes. Obviously, if you're watching the recording, then you knew that answer already. The way you get access to this, though, for my friends here live is going to the membership site, my.tradesmartu.com, and then you can navigate over to the Foundations course. I forgot to mention a couple slides back, there's a lot of free resources there as well. If you go to the library section, there's things like flashcards to help you master chart patterns and candlestick patterns. There's some ebooks in there that are really good. Lots and lots of resources in that membership site. And those are all free. They'll help your learning, and so I would encourage you to go look through there, download them all, start your own little file of stock market resources that'll help me be successful. So in the current trading environment, right, one thing is for sure, and it's that there's uncertainty in the trading markets. This always cracks me up because a lot of people come to the stock market because they want certainty of things. They want certainty of their retirement. They want certainty of cash flow. They want certainty that they're going to be able to take care of themselves if they lose their job, whatever. People are looking for certainty in the stock market, and I just kind of want to look at them with a strange face and say, did you realize you're trading the stock market? The only thing certain about the stock market right now is that it's going to be uncertain. In fact, to kind of take this point to its ultimate conclusion here, this is the S&P 500 starting back in 2014 all the way to current events. And in February of 2020, we had the fastest sell-off in market history. In fact, here's a little fun fact for you guys. From the all-time high, that's what ATH stands for, from the all-time high in February to the March 23 low, it took only 23 trading days. To put this in perspective, the next quickest decline on record is 40 trading days, and that was all the way back in 1929, and then 42 trading days was in March of 2009. So those of you who are around trading or, around period, I suppose we could have some young friends in here, in 2009, this feels a little bit like that to a magnitude of 2x. Like, it still breaks my brain a little bit to think about this. And then fast forward a few weeks, and we've got the largest 1 week gain in the Russell's 2000, which is small cap stocks. Small cap is like what the value of the stock shares times the price of the share, what that capitalization is. That's small versus large cap. So our small cap stocks had the best 1 week gain in stock market history. Right? So do you see a problem with this idea that we should just maybe buy and hold this thing for 15 and 20 years? If so, you've kind of gone through a roller coaster. I forget if I've got this on a slide coming up or not, though, but I just want to encourage you by saying this. Where there's massive amounts of uncertainty, there's also massive amounts of opportunity as well. Write this down. There's opportunity in every season. We're in an economic winter right now, and I don't know how long we're going to be here. Typically, economic winters are shorter than spring, summer, and fall, but we're in an economic winter, and there's opportunities in every season. You just need to know how to trade it. Now, personally, I don't enjoy risking very much of my money at all. So if you think that this is about going out there and being risky, I have to laugh. I taught a webinar just before this. Some of you guys might be coming that are here live right from that webinar. And I was sharing with them my personal trading results, which we're not going to do in this class, but I will do here in the next few sessions. And I said, hey, we reset this account as an experiment in January to $1,500. How much do you think I could have grown this to in the first quarter of 2020? By the way, we've had one of the biggest market sell-offs in market history. And somebody wrote in, they thought I could grow it to $200,000. I don't know if they were serious or joking, but I'm like, I can't even fathom the amount of risk it would take to achieve that. But some people believe that, and if that's you, I would encourage you to just maybe step back for a moment and take a little different look at this. I'm not trying to create, I don't even know what that percentage increase would be, 200,000x my account in 3 months. Like, that's not what I'm trying to do. I actually don't like risking very much of my money at all. I prefer to let the institutions risk their cash to move the market, and then I just participate in a piece of the predictable momentum. Here's an analogy for the opportunity that I believe we have as stock traders, not stock investors today. And I stole this from a friend of mine, Steven. He's a contributor at TradeSmart as well. He shared this a few weeks ago, and I thought it was brilliant, so I'm just unabashedly stealing it for myself. And he said this, when you get thirsty for some stock, you go to the stock vending machine and you get yourself a bottle of stock. In this case, water. When the institutions get thirsty for some water, they go out and have to buy pallets of water. They're turning in purchase orders. They're waiting for shipments to come from overseas or deliveries to be made, right? When they get thirsty, it's a pretty big ordeal. So all I'm looking to do is find out where they're buying or selling their pallets of water, and then I want to kind of ride that tidal wave along with them. So just for fun here, and if you're live, you can grab a pencil and paper, and if you're watching the recordings, hit pause and then come back. I just want to start off by encouraging you that When you adopt this mindset that you don't have to predict the exact turn in the market or know exactly where to get in or get out, when you develop an attitude that I'm just going to let the big boys start moving the market and then I'm going to ride their coattails on to a somewhat predictable, successful outcome, when you have that mindset shift, the whole world changes. And we're going to go through this quickly here because I don't want to belabor it, but this is kind of a fun exercise. This is a ticker, ExxonMobil, ticker symbol XOM. And we're just going to decide, hey, is the market going up or down? Are the big boys buying or selling water at this point? Well, generally speaking, if I put this resistance line on here, and we're going to learn all about support and resistance in the upcoming classes, but if I just help you out and put a resistance line on here, you can see that the big boys, generally speaking, have more water than they want, and they're in the business of selling their water right now. But they can't do it all at once, so they're selling it over time, and that's by regulation, by the way. If you go in and try to sell billions of dollars of shares, the SEC frowns on that, okay? So right now, based on what you can see, some of you guys are trading pros and you already know the answer to this, but some of you are just beginning, and I want you to see it doesn't have to be hard. Do you think that the market's going to go up or down? If you're live in here, you can type in the chat pane. That'll be fun to see that come in, or make your decision if you're watching the recording. Several of you guys think it's going down here live. All right. Down, down, down. Jeffrey's a stud. He's been with TSU for a long time. He and I did some coaching together. Jeffrey's right. It went down. Now we've got a decision to make. Let's put another line in here. This is a support line. We're going to be learning all about support. And it's going to draw again because I messed up my slide. All right, but there's our support line. And you can see that, the big boys, they've changed direction again. And we've got an opportunity. We've come back up through support. Okay, do you guys think this is going to go up or down at this point? All right, Jonathan's first to the bat here live. Up he says, and up it goes, right back up to our resistance line. Fast forward just a few more days, and we overshot our resistance, but no problem. All right, we've come back down through resistance. We're heading the other direction. Now what do you think, up or down? I'm going to get a cup of coffee while you respond. You guys are on it live. They're ahead of me. Okay, you can see where this is going. We're back down to support again. Move forward a couple days. We've confirmed, again, we went down a little below support. No problem. We still got out of our trade. Come back up through support. Looks like it's heading which direction? Probably you said up because I've completely baited you into it at this point. And then we're back up at resistance, and it comes on back down, and then it continues on down, and then it actually crashes. By the way, that scenario right there is exactly how I made a lot of money in 2008 going into 2009. Not because I was some forecasting genius back then, but because I was already seeing the momentum of the underlying stocks and the whole market at the time. And I happened to be in those bearish trades when the bottom fell out of it in 2008. And just made money hand over fist. Many of you guys did the same as well in 2020. And so the question is, this stock is trading at about 76 bucks or so, but this is really a trader's dream because you had an opportunity on each of these revolutions to make 15, then 7, then 12, 11, $10. And was that all 1, 2, 3, 4, 5? Yeah. And we're going to learn all about how you sell short and how you make money going up and down. All that's coming. But I just want you to see that you could have either ridden ExxonMobil kind of down, starting at $80 and ending up, depending on where you pulled the chute, somewhere between $60 and $30, right? Or you could have actively traded this thing and you had an opportunity to make $55 with directional moves. The bottom line is this, my friends. The stock market is volatile. And that's exactly how you make money trading, not investing. Now, none of this is good or bad, and it'll be interesting to check and see what your emotion was as you were watching ExxonMobil go down. Like, were you kind of antsy? Like, did you feel, oh, gosh, like maybe that's not right or that's not good? It's crashing. It's going down. And I will tell you that I do prefer markets to go up because it hurts me in my core when I see retirement accounts getting decimated like we just went through in 2020. I have personal friends texting me, freaking the heck out over the collapse in February of 2020, just desperate for some kind of good news because they're watching their retirement accounts, drop by 30% or so. And so, yes, most of us have a bias built inside of us that we want to see the markets grow. But as an active trader, it's not good or it's not bad. It just is. You've got to apply the what? Right money-making strategy to be able to adapt to any market circumstance. And so I really challenge you right now. This isn't a class about emotions and all that. Like, if you need to change your model of the world, then go to Tony Robbins. He's awesome at that. But at the same time, I'm here to tell y'all, how are you going to be successful if this is how you feel all the time looking at the stock market? You can tell this brohammer is bummed out about the market dropping 30% in the last few days. But that's not the way it has to be. Where there's uncertainty, there's also opportunity. Don Live here says, don't trade with emotions. I agree 100%, Don. It's like you wrote this next slide, my friend. My first order of business when I'm planning for success, turn off the news. Like, no, for real, turn off the news. How many of you guys that are, you've traded before, you've got the big flat screen TV and you got CNBC running in the background and the Dow's up 300 points, the Dow's down 500 points, blah, 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 all these talking heads. Can I just tell you guys right now two things? Write this down. It may be the most important thing I tell you this whole webinar. Number one, the purpose of any financial news show is to earn what? Not money, ratings. Their job is to get ratings. Their job is to sell advertising space. That's their outcome. And you, my friend, are not in alignment with your outcome, which is to earn money, cash in your jeans. Number two, anything that comes out on the newswire has already, by a exponential magnitude, been considered by the pros ahead of time. Perfect example of this is the current crash that we're in right now. And if you guys were in any of the live market updates, if you're watching this, in history, you guys can write back to us here in April of 2020 and tell us how it went. But in April of 2020, in March, we've been doing live daily market briefings because that's how fast things are changing in the stock market. And one of the things I said in our market briefings was, listen, prepare yourself right now emotionally for a flood of bad news. This was early on in March because we knew the coronavirus counts were going to skyrocket. We knew that unemployment rates were going to skyrocket. We knew GDP was going to get crushed. We knew all of these things in advance. But guess what? Fast forward 2 weeks, and it's like the news media finally got the memo, and they're like, oh my gosh, we're up 6 million jobless claims. And they're... I can only wonder how that voice came across the recording. Right? But they're presenting this like they're surprised. And we've been talking about it for days leading up to it. So that's kind of a gross example, as in large example, of any kind of news or media or hot tip that you think you've got has already been considered long before and been priced into the market. There's a saying out there that I think is confusing, but it's worth bringing up now because you'll run across it in your own research. And the saying goes like this: the market discounts everything, which means that it's already factored in anything that has come across your table. There's the big boys, the investors out there, the institutions, what I meant to say, they pay millions per year in investment research. Millions. You don't have that budget, I promise you. But they're managing billions of dollars, and so they can afford to spend $1 million on research. I don't want to do that, y'all. That's a lot of work. I just want to see where they're moving and then ride their coattails. It's so much easier. So number one, turn off the news. No, really, for real. Number two, I prefer to trade the markets rather than invest the markets. I don't think that investing is bad. I don't personally park my cash in the stock market. I have many other investments where I actually park cash. And if you are going to park your cash, I encourage you not to do it. You need to find a fund manager. If you're going to trade your cash, then I think that's totally fine for you to do. And again, we've already mentioned this before, but I can't overstate it. Your plan for success comes down to three things: analysis, strategy, and risk management. And in terms of order of importance, like that's the logical order right there that we work through. But in terms of order of importance, it's risk management, analysis, and then finally apply your strategy on top. So we're about an hour in here. Let's talk briefly about trading versus investing, and I'm going to try to wrap this up in the next 15 minutes. Stay in a peak state here. Stay alert. You know, put me on 2x speed if you're watching the recording, or pause it, grab a cup of coffee. If you're here live with me, just kind of beat your chest a little bit, and let's plow through to the end. All right. So many great things being said in the live chat pane. Let's talk about trading versus investing. By the way, if this is, beginner kind of C-spot run for you, that's okay. I want to make sure that we bring everybody along. So, we'll get into some really advanced stuff. I mean, everything all the way through the end. You'll have a complete trading system by the end. But we've got to start at the beginning. So just be gracious with those who are onboarding right now for the first time. Some people are in here, they're like, I've got a pencil fire because I've taken so many notes. So traditional investors, people that are stashing their cash in the stock market, they're buy and hold. They're the ones that are listening to the advice. It's like, don't sell, hold. Just everybody chill out. Don't sell when the market's down 30%. Those are the buy and holders. They want the market to go up because that's how they make money. In fact, some funds, depending on how it's set up, some funds can't even short the market, right? They can't make money when it goes down. You may want to look into that depending on what fund you're invested in. I would encourage you, if you're looking for a place to park your money, that you trust other people to do it on your behalf. If you're looking for a fund manager, email us at tradesmartu.com. I have several that I could put you in touch with, different people for different size investments. And I'd be glad to forward that on. I don't get paid commission or anything, but if you're looking for a place to stash or park cash, reach out. I'll send you people that I think are very good and reputable. Most investors are holding trades at least 2 to 5 years. They're focused on saving money, and they're targeting a 15 to 20% annual profit return. Now, investing isn't bad, but as we've said all along, just don't confuse it with active trading. Be prepared that your money is going to go on this little bit of a roller coaster, and if you're not ready for your emotions to, do this and result to that emotional roller coaster, then you may need to rethink where you're putting your cash. The stock market may not be a good place for you to park cash. Maybe you want to use it to trade cash. And I left this out of the slides, but I'll say it right now. People can invest millions into the market, investment. My personal experience is when you start getting much above a 6-figure trading account, it gets very, 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 very difficult for reasons of liquidity and etc. that we'll get into in level 2 and level 3. So personally, if I start getting up into that 6-figure range, I take all that out and I'll put it in either a place that I want to park money, or I'm buying wells in Africa for my wife. I love her to death. So, where was I going with that? I don't know. I've totally derailed my own train of thought. Fun side note in here. So the first time we taught this, Foundations of Stocks and Options, my oldest son, who's now 16, was going through Foundations of Stocks and Options. Now, fast forward to 2020, our middle child, we have 5 total. Our middle child, Josiah, is going through Foundations of Stocks and Options, and he was going to log on live. I'm not sure. Are you in here, buddy? I don't know if he's in here in the webinar or not. I kind of forgot to send him the link, jerk dad that I am. But Josiah is going to be joining us, and he's quite the entrepreneur himself. So anyway, we just need to make sure we keep everything PG in here. All right. So this stock of Boeing, ticker symbol BA, this is an investor's nightmare, right? Because largely it's gone sideways, and obviously the bottom just fell out of Boeing in the last couple months. But for the most part, if you invested, this was 2018 back here. You can see at the bottom of my screen, 2018, it just kind of went flatlined until it died. It traded right around $350 one way or another. So investors fear Boeing. And it's just a great blue chip stock, right? Like, Boeing Airlines, they're not going anywhere. They'll probably get bailed out. And by the way, this may be a great trading opportunity right now. That's a whole separate conversation. So investors fear Boeing, but my friends, this is a trader's dream. Remember that ExxonMobil? And I just kind of highlighted what some of the swings are that you could place in this. And I'm not even saying that you're going to catch this move here or this move all the way down here. I'm just saying if you bounced along between this sideways, and I didn't even put this one in here because we didn't quite get down to our target support here. If you just bounced along between support and resistance, this is 10 times it went back and forth, roughly $50. Now, I'm not maybe the greatest mathematician in the world, but 10 times 50 is $500 collectively of stock increases or decreases. We can make money either direction it goes. We're going to learn how to do that. That's $500 when the whole stock was only trading at 350. You almost, 3x your investment, 2x your investment? That'd be 700. 1.5x your investment over a 2-year, year and a half period of time. That's a trader's dream right there. And so some of you guys were looking at that ExxonMobil saying the chart previously, well, is it really that easy, Josh? And I said, well, yeah. Does it have to be that much harder? If you're disciplined to find these trades. But the problem is, right, as people start practicing their trading, they take years, they look at a chart like this of Boeing and they're like, that's awesome. This is so easy to do. But how many times did I trade over, what's the actual period of time here? So this is 2018, June to, it's just over a year. It's right at about a year and a half. So 18 months, I placed 10 trades. That's less than one trade per month. Not that I actually traded Boeing during this season, just saying in this particular example here. But people place 10 trades and they, earn $500 on a $350 stock, or now a $150 stock. And they somehow think that they're going to take that same result and then experience it in 16 minutes of trading or 16 days of trading, right? And they're not willing to stick to their strategy. But anybody could have done this, bouncing back and forth between support and resistance, and even using appropriate stop placement. I don't think any of these trades, maybe this one right here, this would have been the only one that possibly would have got stopped out. All the rest of them basically went right to their targets. Okay? That's the trader's dream. That's the difference between investing and active trading, right? We're looking at the stock market differently. Active traders are constantly buying and selling. They want the market to move. They're typically managing their own money. They hold trades for days or up to months. I hold trades for days up to weeks, really. I can't think of the last time I held a trade for a month. And that big change is commissions. Commissions are basically free now if you're trading stock. If you're trading options, they're pennies on the dollar. And so with that change in commission structure, there's no reason to risk. When you start getting a pullback, then you just exit the trade. We're focused on creating cash flow as active traders, and we measure monthly ROI, right, per trade. There's only 4 things you can do to change your profitability. Did I mention that to you guys in here? I can't actually remember if I said that in this class or the one I just taught right before it. But write this down if you haven't already. There's 4 things you can do to make more money trading stocks. Number 1, increase your win-loss ratio. Number 2, make more money on your winning trades. Number 3, lose less money on your losing trades. And number 4, lower your overhead. And with commissions being down near 0, there's not a lot you can do on your overhead. So I really should update my saying and say it's the 3 levers of profitability. That's it. Anything that you're going to learn over the next 7 classes or 23 classes, if you go through all 3 levels, needs to fall into one of those categories as well, right? So you got analysis, strategy, and risk, and then you got your next bundle of 3 categories. Is it helping me with better decisions on directions? That's win-loss. Is it helping me make more money on my winning trades, or is it helping me lose more money on my losing trades? That may be analysis or strategy. Here's a comparison chart, traditional versus active traders. Traditional traders buy and hold, while active traders buy and sell, constantly buying and selling. Traditional traders want the market to go up, while active traders want the market to move. Traditional investors trust others to manage their money, while active traders are managing their own money. Traditional investors want to hold their trades for several years, while active traders hold trades for days up to weeks or months. Traditional investors are focused on stashing cash or saving money. Active traders are focused on creating money, as I like to say, putting cash in their jeans. Traditional investors are targeting 15 to 20% per year-ish. Some of you guys are like, man, I'd love 20% per year. Which, by the way, if your manager wasn't getting 20% per year in the greatest bull market in stock market history, then you may want to find a different investor. But anyway, that's besides the point. Active traders are looking for monthly per trade profits out there. I've shared with you guys my results, and I'll pull up that trading account here either at the end of this session or maybe next session. But I'm up 3 months in to 2020. I'm up 50.88% is the exact number. Traditional investors get scared during bear markets. I can testify to that firsthand with the number of text messages that started coming in around the end of February. And then active traders have fun and they prosper during bull and bear markets. Now, I will say this current bear market that we jumped into and jumped out of nearly just as fast, it's been so unprecedented that it's been difficult. Sorry, there's a bug floating around. It's been difficult to do much more than day trading. So, you know, it's much different than we had in 2007, 2008, which was kind of a slow roll-off into the big crash. The coronavirus just caught everybody by surprise. And if it didn't catch them by surprise, they're lying. And, you know, they either had insider trading information, which all those people should be prosecuted, in my opinion, like government officials from both parties, or they were caught by surprise. So, could you be an active trader, right? Day traders are in and out the same day. That's what everybody's doing right now. Short-term swing traders are holding their trades for 2 days to 3 weeks. That's what I am primarily, as a short-term swing trader. There's also intermediate swing traders, which hold trades for 3 to 6 months. There's position traders that hold upwards of a year or more. And one great example of that right now, these stocks are so cheap that if you understand options trading, you can go buy a 2-year leap option on some of these stocks and control the shares for pennies on the dollar. It's a really interesting opportunity that we've not seen since the bottom in 2008, 2009. So that would be more of a positional trade where you're looking, it's still an active trading strategy and it can be combined with other trading strategies, which I'm not going to get into now because I'll just confuse you, but that is an appropriate way to trade the stock market. Options traders and stock traders, it doesn't matter what time frame. You can be looking at 5-minute charts or daily charts. Retirement accounts tend to be longer term focused. Income accounts are going to be looking at multiple time frames. So that's where you've seen the charts where somebody's got the daily chart up and then they're looking for a 15-minute confirmation on a chart, right? That's active trading as well. But what's not a characteristic of an active trader is the idea of value vesting or being, you know, long-term focused. Where's this thing going? Am I going to get dividends on that? That's more of a longer-term park your cash kind of investment strategy. Real briefly at the end here, the tools that you're going to need. You've got to get some great education, which you're already doing. Congratulations. You also need charting software, a broker, and virtual trading access. So for charting, there's lots of great softwares out there. You're going to see me using tradingview.com. There's a free version of that. There's a paid version of that. We're going to send you guys out. In fact, if one of my moderators could make a note, we can send you guys out a link. We do get some kind of credit with TradingView. I don't know. We've done this for years. I've never seen $1. So, but it helps them know how many students that we're sending them, and that way we have more leverage when we want things done. So if you do need a charting platform and you've not signed up for TradingView yet, we'll send you out a link and you can sign up, and that'll give TSU credit for sending you there. Brokers also typically have really good charting software. So TD Ameritrade, for example, they own Thinkorswim. It's awesome. I mean, it's truly a spectacular trading platform. Same thing with TradeStation, a spectacular trading platform. Good charting is a must. Everything comes back to the charts for traders. So make sure you get a really good trading platform. Brokers are a dime a dozen in the U.S. here. If you're in Canada, it's a little bit harder. But they're the ones that bring the trade to your table. So make sure that you like them. They're here to serve you. And if they're not serving you, you need to switch. There's just too many brokers that'll take good care of you. Personally, I trade with Schwab, and I do that because I used to trade back in the day with Options House. I love the way that they lay out their options chains. I love the way they make it easy to do contingency orders, which you're going to learn all about. And so if you don't have a broker already and you want to do exactly what I'm doing, you may think about setting up a Schwab account. TD Ameritrade is also awesome. There's a very large segment of TSU students that love TD Ameritrade, and I've even debated setting up a second account over there. And I have multiple accounts, setting up a separate brokerage over there just to experience that platform. So you would get lots of support from TSU students if you sign up for TD Ameritrade. Also, Alfonso and Steven, two other TradeSmart instructors, they use TradeStation. They're awesome. All these brokers, by the way, should have $0 commissions, so they're all the same. And then if you're some of our Canadian friends or international friends, Interactive Brokers is a great option as well. They used to have a minimum account size. They may have relaxed that to be competitive with the others. None of these other brokers have a minimum account size. But IB used to be $5,000. I don't candidly know if that's still the same or not. You could check that out. But it is a good Canadian broker. Virtual trading allows you to trade without risking any real money. It's the ideal place to hone your skills, and it's the key to learning to trade. I encourage everybody to get virtual trading. Real money brings with it emotion, which is risky, so learn to trade in the simular. You can get virtual trading from TradeStation or Thinkorswim or TradingView. Unfortunately, this is a downside to Schwab, and for reasons that are unknown to me, they discontinued their virtual trading several years ago. Excuse me, hiccups. So Schwab will not provide virtual trading, but TradeStation will. And you literally just click a button and your green chart turns orange, or your green interface turns orange, and then you can do everything virtual trading. Now Schwab does have a demo platform, so you can practice placing the trades and doing all that so that you're comfortable with their interface, but it won't track your trades, and that's important to be able to track your trades. So if you want to do Schwab to match what my brokerage platform is, TradingView has a free virtual trading platform. And I'll kick out of the slideshow here and show you TradingView. So you sign up for an account, and then if you come down here to where it says Trading Panel, click that. You can see right here, you could sign up for paper trading. And there's several that I know that have been doing that, and it works pretty well. Maybe not perfectly, but it works pretty well. I don't candidly know if it can do options or not, so that may be a little bit of a trick there. We'll cross that bridge when we get there. There's also no points deducted for setting up a TradeStation account and doing your virtual trading through that, but then actually trading through Schwab as well. And heck, maybe sign up for a couple brokerage accounts to see which one you connect with. You will have to do a deposit to get your account started, like $500 or whatever, but then you could withdraw that immediately, down to like $1, leave $1 in there, and then go set up another account too. So that's actually not a bad idea, is to set up some multiple accounts. Let's do a brief introduction to charting, and this will take us right up to that hour-and-a-half mark. I was hopeful to be done in an hour, and I've managed to get long-winded again. So there you have it. So this is a chart. Does that excite any of you guys? It excites me because this is the foundation of all of our trading decisions. So let's get acquainted with what this price chart is. At its most granular level, a price chart is the plotting of historical prices of a stock as they happen. It's useful in identifying trends, it's useful in identifying sentiment, and it's useful in anticipating or forecasting future price action. Here's how you read your price chart. There's 4 key price points on any given session. Typically, we'll be looking at a daily chart, but if it's a 5-minute chart, the same applies. For any given session, there's an open, there's a high of the session, there's a low of the session, and there's a closing of the session. Now, there's 3 different styles of charts that you may be familiar with. You've got the line chart, which is what most people think of when they're brand new to trading. But then you've also got the bar chart, and then an upgrade on the bar chart, which is the candlestick chart. The line chart is set by default to only use the closing price of the day. Now, there's some cutesy things that you could do where the line chart will use the high or the low or the open or all of the above. and some fancy charting softwares will give you that. It helps you see an idea of what the volatility is in the stock. But just your default, when you open your charting platform, it will default to a line chart with closing prices only. It's created literally by plotting the closing price and drawing a line from point to point. So here's how you would construct it if you wanted to. And back in the day, don't you know that Charles Dow was doing this on graph paper? In fact, one of my mentors in trading, he's an older gentleman, and he used to do fund management and active trading back in the 60s and 70s. And he had chalkboards around his office, and he would have an assistant that would come in, and one of her jobs every day was to update the chalkboard when all the data came out on the ticker tape. And so his charts literally like progressed on a chalkboard in real time, and that's how he would sit back and analyze and decide what positions he was going to enter and exit. Y'all, we have like fast forwarded in quantum leaps since then, and now you can push a button and have basically access to any kind of analytics that you could ever dream of on your charting application. And those of you guys who are programmers or have a touch of nerd in your blood like I do, you're going to geek out on all of the charting and analysis and things that are available. But at its most core level, like my mentor Maurice, you know, on whatever that is, January, February, March, April, May, June 6th. Sorry, I don't have the months memorized. June 1st, it plotted at $45. On June 2nd, it plotted at $47, so on and so forth. 50, 46, 40, 44, a little higher, 50, down to 45, down to 40, down to $30. And then you draw a line connecting the dots. Now you've got for yourself a bona fide line chart. The benefits of the line chart are it's really easy to see your price action form, and we can start doing some analysis like support and resistance lines that I showed you on ExxonMobil and on the Boeing trades as well. It also makes it very, very easy to see the overall trend of higher highs or higher highs and higher lows, which is an uptrend, or lower highs and lower lows, which is a downtrend. You don't need to write that down. That'll be coming up in an upcoming presentation. The downside of the line chart is it only shows the closing prices, and it doesn't reveal the true sentiment of what's going on in the market. And it can be hard to trade from the line chart alone. In fact, what many of you will find is once you learn to read the other more advanced charts I'm going to show you, you'll seldom go back to the line chart. I only go back to the line chart to make it simple. Like if I'm trying to do a demonstration and I'm wanting to clean up so my charts aren't busy, I'll go back to the line chart. But generally, when I'm personally trading, all I'm looking at is the candlestick chart. Now, the expansion on the line chart is what was known as the bar chart, and this was super popular through the 80s and early 90s. And this starts to encompass all of the information for the session, or if you're on a daily chart for the day, the open, the high, the low, and the close. This makes it much, much easier to see overall sentiment and directional move in the market, and it helps us make much better informed trading decisions. So here's how you actually construct the bar chart, or the bar of the bar chart. This is Apple back when it was trading at 113 bucks. Doesn't anybody wish they could have a little Apple stock at 113 bucks right now? But we just pulled this up from Google Finance, and you can see the open of the session right here is 112.17 points. So we'd plot that, 112.17. Then the high and the low, right, was 111.54 up to 113.31. So we'll plot both of those and draw a line connecting those dots. And then you've got the exit, or not the exit, the close of the trade of the day, which was 113.29. And so that hash mark goes off to the right. So you enter the bar on the left with the open, 112. Then you got the low and the high of the session. And then we exited on the right-hand side, which was right up near the high of the chart. So you can see that little hash mark right up here is right about where the high of that session was. Gives you a lot more information available, and as you start plotting these over the next several periods, you're able to see not just where the market was closing, but what the sentiment was. Like, was it a really volatile day, or was it not a very volatile day? And we're going to start using that information when we do deeper analysis on these charts. So the benefits of the chart, the bar chart, is that it reveals all of the key information available to us, the open, high, low, and close. It also shows the market sentiment and is still easy to see the trend work that we were getting from the individual line chart. Now, the downside of the bar chart is not to be understated here, because if you get a bunch of these bars on your screen, I don't know about you, maybe it's just my vision, but those little hash marks are like, they get lost, and it's just gobbledygook on the screen. Everything starts to run together, and there's a better way. And this was introduced to Western traders by a guy named Steve Nissen back, I don't know the exact date, but it was mid-90s, I think. And he introduced this idea of the candlestick chart, which he took from the Japanese rice traders. He studied this for years, went over and looked at how they analyzed charts, and he brought this to America. Just a great, he's still alive. He's an icon in the world of trading. The candlestick charts, and I encourage you guys, it's not too expensive. You can get his book on candlestick analysis. He's got 2 of them out there, and you'll learn more about candlesticks than you ever wanted to know. But what's cool about the candlesticks are, yes, they encompass all of the open, high, low, and close data, but it adds color to the bars. Many of you on your charting applications will default to red and green bars, which I'll explain here in a second. I don't like that. I like the black and white bars, but that might just be my old school traditional nature. That's all we used to have back in the day, and then somebody got fancy and made them green and red. There's a lot of other benefits of the bar charts as well, one of which is it tells the story of what the candlestick was. So if you can imagine Japanese culture, it's very symbolic and story-based. Well, each of these candlesticks and candlestick patterns has a story that it's telling about that session. And once you learn to read those stories, candidly, I forget the names of the candlestick patterns. I'll have to brush up on them before we get there in the foundations content. But I learned to read the story. I know what it's telling me in terms of market sentiment. The way that you create these candlesticks, again, is by plotting the open, high, low, and close of the session. So there's your opening price. There's your high and the low. That's the wick for the candlestick. And then the body, if it closes higher than it opened, right? So it's an up day. Well, if it's an up session, closes higher than it opened, then it's an open candle, which we would call white. That's why I get confused with the colors, because it's technically an open candle, a white candle. The inverse to that is if we close lower than we open, there's your open, your high, the low, the closing price. If it closes lower than it opens, then it's a closed candle, or a black candle in this case. Okay? So here's how we would construct this candle. You've got the same Apple chart. There's your open, 112.17. We're going to draw a line there for our open. Then you got the high and the lows of the day. So we're going to go ahead and draw that wick behind the candlestick body. And then you've got the close, which was higher than the open. So that same candlestick that we saw with the bars before, now you've just got this session where you've got a little lower wick, but we closed right up near where the high of the session was. So that's what the up candle looks like. And you can see that if you just plot these on the chart briefly, you can see, oh, that was an up session, that was a down session. And we're going to start to learn to read the stories of these candlesticks. But for now, I just want you to understand this. Candlesticks allow us to see all of the price data that we need, open, high, low, and close. The colors, in this case, black and white, or green and red is the corollary, make it easy to identify what kind of a candlestick it was. And the patterns become easy and easily recognizable. And we're going to learn about candles patterns in an upcoming class. So here's your example of a real line chart. Here's your example of a bar chart. And I'll show you this on TradingView as well. Right, so you can kind of see what's going on there. The bar chart just looks crazy to me, although lots of people traded with these for years. There's the candlesticks charts. That gets so much easier to read, in my opinion. Let's flip on over to our TradingView here, and we'll take a look at these. So this is the S&P 500. This is current events, by the way. True. Should be streaming right now. Yeah, it is. Just going slow. So this is a live chart on the S&P 500, and you can kind of see current events, right? Well, let's find a different candle here. These are also, so this one, great example, right? See that big upper wick there and that big lower wick, and the body, like this was, let's take a look. So keep an eye. In fact, I'll draw a square around that so we can see it, or a circle. Okay, so keep your eye right there. We'll flip over to a line chart. See how easy that would have been to miss, right? On the line chart, it's kind of like a know-nothing kind of day, like especially compared to the volatile days that we'd been having leading up to that. But if you dig in deeper and you look at the candlestick chart, you can see, oh my, at one point we were all the way up here. We had a candle that looked like that, and then the selling pressure came in, and at one point we had a candlestick that looked like, actually it looked like this. And at the end of the day, you know, we went up, we went down, and we just ended with that little, that's called a spinning top candlestick right there. Tells a much more complete story. I think it's easier to see as well than this bar chart as well. I mean, that's just really, really difficult to read, in my opinion. Some people love them. Difficult to read, in my opinion. Here's the closed candlesticks right there. So you can see those are colored. Still, the green candle is outlined in green, but still the white candle. If in TradingView, I've reset mine. So where it says candles, you can see, whoops, right here where it says candles, that will default to red and green, which you may like, especially if you're beginning, you may like that. But I just double click on any candle and I can set here. I can set what the body of the candle is, right? So white is up and black is down. I can set what the border is for each of those, and I can set what the wick looks like. So I've just custom done that in my own platform, which is why also you want to set up a trading account with TradingView so it will save these. You don't have to pay. Setting it up is free. But you do want to save your settings so you don't have to come back and redo them. I will say if you get the free version, an advertisement will pop up here like every 10 seconds, and that drives me nuts. And so, you know, I've got the Uber version, but it's like $200 a year. I mean, it's nothing. It's so cheap. All right, so that's today's session. Going forward, your action steps, if you can. If you're here live, this should be done before tomorrow, ideally. If you're on the videos, you know, this should be done before you progress to the next video. Certainly mark your calendars for all of either the live sessions we're in right now, or mark your calendars for the application sessions. Then make sure you get your broker chosen. If you've already got one, great, you're ahead of the game. If you don't have one, heck, sign up for a couple. Try Schwab and try TD Ameritrade or whatever. Choose your charting software. I like TradingView, but you can use whatever you want. And then find a friend to trade with. It's really important that you get some accountability, both for education purposes and also so that you can hold yourself accountable to doing what you say you're going to do with your trading plan as it starts to come together. So that's class 1 of Foundations of Stocks and Options level 1. I will leave off here with my recording friends. Blessings on you guys. You're welcome to kick off and go to class number 2. For those of you that are here live, I'm happy to stick around and answer questions that you may have for as long as it makes sense. So blessings, guys, and I will see you around. If you're on the recordings live, hang tight with me here for just a second. All right, so what questions do you guys have here who are live with me? Motive Wave is great as well. I could have mentioned that before. I think we still have a link to Motive Wave somewhere at TradeSmart. They run natively on Mac. I love them. They're really, really good. All right. Looks like Rob and George are connecting on brokers. Awesome. Angelo, I'm doing these Monday, Tuesday, Wednesday, Thursday, Friday, all 5 days up through Wednesday of next week. So we're going to just plow right through this. Awesome. Did I say something different? Schwab bought Options Express. You're right. I said Options House, didn't I, on the recording? They bought Options Express. Yes. Rookie mistake. Trade Navigator is great. The reason I don't use Trade Navigator is because it only runs on PC, and I use a Mac, as you can tell from my keynote and screen. So I just get tired of installing parallels, and I love it. I know Glenn Larson very well, CEO of Trade Navigator. I encourage you guys to support them. They're icon in the trading industry as well. Don't want to be a jerk. Were you saying something jerkish? Was it questionable, Patrick? I missed it, whatever it was. Or was it the correction on on the options house thing. I'm always happy when I'm wrong to be corrected. It's once I thought I was wrong, but I was mistaken. TD Ameritrade or Schwab? If you don't know either platform, I would maybe say TD Ameritrade. But I'm not gonna. All the examples or anything that I demo live will be in Schwab. But TD Ameritrade has virtual trading. They have the Thinkorswim platform, which is epic, and I think you'll be able to get some support from other people using it. So, you know, Jeffrey, I think you're right. I think Schwab did purchase TD Ameritrade. They're still separate platforms right now, but I think you're actually right. I remember that. I remember mentioning it. They wanted the Thinkorswim platform. I don't blame them. Thinkorswim's been around forever. They're still in the process of completing the merger. So I'll show you guys this. This is probably what they'll do. Let me get logged into Schwab here. No monthly fees for virtual trading, George. You should expect free. And if they charge you anything, you should tell them to take a hike. Like, that would actually make me angry because people need to learn how to trade before investing real money. All right, so this is my Schwab account. This is the account performance year to date, and this is the style of trader that I am. That was a bad day, and then up. So, you know, I'm more of that lifestyle trader. I don't think we talked about it in this session here at all, but I don't feel the need to sit in front of my computer all day, every day, and just take trades. I'm happy 50% year to date. I'd like to double it by 6 months into the year, and then we'll maybe look at doubling it again by the end of the year. But here's what I wanted to show you guys. So with Schwab, and I imagine they'll do something similar with Thinkorswim, TD Ameritrade, I just come over here to Trading Hub and click on Street Smart Central. That's the old Options Express platform that I love, and a lot of you TD Ameritrade people love your platform, so I'm hoping they do something similar. So if this pulls up here, let me show you one of these options chains. Where is it? Quotes. I get confused because it's under trade in their main platform, but it's under quotes in Street Smart Central. And there's the old Options Express chain. A lot of you guys saw for many years. We taught foundations with Options Express. You've seen these options chains. I can come in here and do buy, and then I want to sell, and then it will actually come up with a little trade calculator here for me. So if I wanted to do that, just defaults here. It should, if they haven't changed it. I haven't done one of these in ages. And this is breaking down a little bit, so that was a bad example. But they used to do these little trade calculators. It's still in here, but it used to be in chart fashion, not numbers. But they would do your projected wins and loss, mini price, or what's that? That might be it. No, that's not it. So anyway, and then you can just come and click trade. I won't do that because I don't want to place this trade, but this would be a spread trade. So anyway, what I like about it a lot, so if I do that and then click trade here, I can create these advanced orders. If I click down here, and this is where I can say I want to do a contingency on price, and I want that price to be on Apple. So this is an if-then statement. So if Apple goes above blah, 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 last price increases to blank, then execute the order. And so that's how you can set it and forget it, which is the less emotional way to trade. Do your analysis, set it up, say if it triggers, great, and then at the same time put my stop order in as well. So we'll go through order placement and all that. That's not for today, but anyway, that's probably what it'll look like when Schwab fully integrates the TD Ameritrade platform. Get back to my questions. Did I miss it? Dilawar. That's a cool name. I'm not going to go back. I'm just going to confuse people that don't know options trading yet. Hey, Scott. Good to see you, man. They still have Central. Yeah. Yep. So it's called Street Smart Central. And this was an aha moment. I was talking to a guy. I got mad at TD Ameritrade because they didn't drop my commissions to zero. And I executed like 3 or 4 trades back to back to back. And they didn't drop my commissions on them. And it irked me. So I was like, screw it. I'm going over to Schwab. They were happy to give me free commissions. And when I was talking to them, onboarding back to Schwab, I'd never had a Schwab account. I had a Options Express account, but that got absorbed into Schwab, and I just never traded with them. And the onboarding process, I was like, man, I really miss the Options Express platform. And the lady that was helping me, she was like, oh, it still exists. She was so excited to share with me because apparently I'm not the only one. So they just renamed it Street Smart Central, which is awfully close to a trademark infringement on TradeSmart University, but not quite. I know, Rob. I wish our Canadian friends had free commissions as well. Are you able to set up a U.S. account, or does that violate anything? I don't know. I mean, it would be cool if you all could just set up a U.S. account. I know you can get U.S. credit cards. You cannot set up a U.S. account. So, Rob, remind me when we talk through option strategies, you may look at some selling strategies, and they shouldn't charge you an exit commission if the option just expires worthless, which is what you want to have happen if you're in a selling strategy. So there could be some opportunities there to reduce your overhead a little bit still. Oh, lots of questions that I missed here. What monthly fee? Okay. Hey, Grace, what platform can do back trading with historical data without charge? TradingView can, and Trade Navigator can as well. Which, if you're interested in Trade Navigator, we do have a custom TSU version called Trade Lion, which we developed in conjunction with them. And so if you really are interested in Trade Navigator, let us know. It's a great platform. Not the cheapest, but it's a great platform. But TradingView will do back trading. So it's called Replay. So I can click where I want to start, and it'll go, and I can replay forward. Now I got to remember how to get out of here. Move my Zoom thing again. Yes. George, are you planning to do any night teaching? I like the live teaching, but I normally can't do daytime. George, no. And here's the reason why. Because you don't get the best version of me at night. When the clock hits about 6 p.m. my time, I start turning into a pumpkin. Now, I'll get up at 4:30. We can hang out at 4:30 a.m. It's just my biology clock. And so since we're doing these for the recordings, I want them to be a good version of myself. Number 2, if I start feeling like TradeSmart is taking over my life with my family, then TradeSmart loses. My family's the most important. So if I'm going to teach every single night for the next, 2 months, that's not sustainable for me. I'd never see my kids. So anyway, for those reasons, I'm going to teach them at the same time. I'd love for you to be able to come, but if not, all the recordings will be up. I'll get them posted within a couple hours of finishing the teaching. So I wish that would have worked out better for you. And maybe we'll all be on quarantine and we can all do it. I've got Thinkorswim and Tom Sosanoff's new platform, Tastyworks. Although Thinkorswim has no commissions, Tastyworks does. In opening trade only, the fees at Thinkorswim are greater than the Tastyworks commissions. I have not investigated the Tastyworks platform at all, so I can't confirm or deny. I know it's kind of brand new. But that's good feedback. Schwab could be militant about day trading. I think most are militant about day trading, aren't they? So as I'm going to teach you guys to trade, you don't really need to worry about becoming a pattern day trader. But if you're trading stocks and you're going to plan on having multiple round trips in a short period of time, then yeah, you will need a pattern day trading account. But with options trading, you can get around most of that. And it also has to be on the same security. So a little creativity can get you around that as well. Like right now, I mean, you could trade an ETF on the S&P, you could trade an ETF on the Dow, you could trade an ETF on the NASDAQ, you could trade a 3X ETF, a 2X ETF, a 1X ETF. I mean, there's a lot of creative ways to get around it. I suggest doing a search. I found a Financial Post article that explains some of that on the pattern day trading. I missed where that came in. Oh, for Don. Okay. Oh, I see the U.S. accounts. All right. All right, guys, I'm going to wrap up this webinar. If you have any other questions, you can start putting them in the Slack channel. That's what that's for. You'll be getting information about how to sign up for that. You can put them in FOSO Facebook page. And, certainly, those are the best vehicles for you to use, but you can always email us at info@tradesmartu.com. There's a good chance Rebecca will first redirect you to one of those other outlets, but if it's a specialized question or something, I'm sure we'll be able to help you. Blessings, guys. Have a great day. I will see you same time, same place tomorrow for even more FOSO fun. Thank you for honoring me with the last 90 minutes of your life. Hopefully it returns dividends and multiples to you. Blessings, guys. Have a great day.